Welcome to Resource PNG. Just 2 weeks ago, the Mineral Resources Development Company, MRDC, launched the country's first and single biggest project, the 1.1 billion kina Star Mountain Plaza, on behalf of its subsidiary companies. Over the weekend, MRDC marked another milestone project, this time in Fiji, with the 107 million kina Pearl South Pacific Resort. Fiji's Prime Minister, Frank Bainimarama, has expressed his government's appreciation to PNG for having investor confidence in his country. With Fiji fast becoming a favorite tourist destination in the Pacific region, the Pearl South Pacific Resort is expected to cater for the industry demands and meet the desired returns for the PNG landowner trustee company.
Pearl, as it's more commonly known, is located on the Pearl Harbour some 42 kilometers from Fiji's capital, Suva. It was acquired by the Mineral Resources Development Company in 2012 and has since undergone expansion. What was marked on Saturday was the opening of the new-look Pearl Resort and its expansion from 78 rooms to an additional 132 guest rooms. The project was completed 2 months ahead of schedule and under budget.
Tonight is a special night for MRDC. Since its establishment 40 years ago, the Pearl Resort development represents MRDC's first major project of its kind. MRDC's primary role has always been the collection of royalties and dividends from mining and petroleum projects and distributing to the landowners and provincial governments. MRDC has always been a rent collector or passive investor until we took the initiative to develop the Pearl Resort, which has triggered a paradigm shift in our role and status in the region. Most saw the Pacific Harbour as a sleeping town. The Pearl Resort at times had low occupancy and was in a desperate need of upgrade. Even the golf course was in a state of neglect and you couldn't tell the difference between the greens and the fairway grass. We saw the Pacific Harbour differently. We saw unrealized potential and the means to harness an underdeveloped opportunity. We saw the Pearl as our next gold mine.
Fiji's Prime Minister Frank Bainimarama was in attendance with his wife and officiated at the event. He welcomed the PNG delegation, which included MRDC Managing Director Augustine Mano, Minister for Finance James Marape, Governor for Southern Highlands William Powi, Governor for Gulf Havila Kavo, Deputy Governor for Western Province Abini Gesele, senior executives of MRDC, and landowners and shareholders. Mr. Bainimarama acknowledged the confidence of MRDC and the landowners in investing in Fiji. He added that the tourism sector in Fiji has grown over 9% compared to this time last year, and Fiji intends to capitalize on this growing global interest in Fiji as a holiday destination.
Your Excellencies, ladies and gentlemen, the $85 million transformation of the Pearl Resort is a very warm welcome milestone in the development of the tourism industry in Fiji. So I'm delighted to be here in Pacific Harbour this evening to officially open a new extension and the 132 rooms that are being added to the resort. The Pearl Resort is one of the 2 major investments by Papua New Guinea in our tourism industry. The other, of course, being the Grand Pacific Hotel in Suva. And in both instances, investors from PNG had the foresight to realize that these properties had huge potential and possess the financial resources to unlock that potential. To MRDC and the landowners who benefit from its investments, I especially want to say how much my government appreciates your confidence in Fiji. Thank you too much.
Minister for Finance James Marape said relationships between nations are built on different aspects, including business, commerce, and trade.
PNG and
Fiji has seen a growing rapport in as far as various business exchanges are concerned. Today, as we speak, we have many Fijian businesses who have business address in Port Moresby, in Lae, and in many parts of PNG. And likewise, it is also nice to know that PNG businesses are finding address in Fiji, that of which we are so thankful and appreciative of the kindness and justice that the government of Fiji and people of Fiji continues to render to us.
Fiji's Prime Minister then officially opened the new-look resort. That was followed by performances from students of the University of the South Pacific. The resort features 220 rooms, a world-class marina, new multiple conference facility rooms, modern spa and wellness center, a fine dining beachside restaurant, a new gymnasium complex, a wedding chapel, and the 200-acre championship golf course. The project contractor was Pacific Solutions. This project is regarded as the third largest project that will impact the Fijian economy and one of the largest freehold resort properties in Fiji. In a separate interview with the Governor for Southern Highlands, William Powie, he said the Star Mountain Plaza in Port Moresby and a Pro-Pacific Resort in Fiji are projects that are now changing the mindsets of mineral resource landowners from being just rent collectors to being developers.
Landowner companies and businesses in Papua New Guinea must take the front seat in the cockpit. We're no longer going to be passengers in the back. The national content is critical. It's about time we become joint venture partners. We just don't sit back and become rent collectors. We've had enough of rent collecting and sitting at the passenger seat. I think we, as Papua New Guinea turned 40 years in independence this year, we need to be in the cockpit in terms of business and investments, so we drive.
General Manager of the Pearl Resort, Natalie Marletta, said business is booming with advanced bookings made for the rest of the year.
And already starting to bring into Pacific Harbour. We've been full for the last couple of months, desperate in need for these rooms, so we're really excited about having them come on board. Australia and New Zealand probably are our major markets, followed by the US and Hong Kong. So we get quite a few visitors come in, majority families, divers. So we're looking to push that even further, branch out to the European market also.
The shareholders of the resort are the landowner groups Petroleum Resource Kutabu, Mineral Resources Star Mountains, and Mineral Resources Octedi No. 2 in partnership with the state.
You're watching Resource PNG. Coming up after the break, an update on an Australian energy company's bid to acquire Oil Search Limited. Welcome back to Resource PNG. On September the 8th, Australian energy giant Woodside formally made a bid for Oil Search Limited. The proposal, valued at close to 23 billion kina, was put forward to the board of Oil Search. Following consultation with its shareholders, the board of Oil Search this week rejected the bid from Woodside, describing it as highly opportunistic and grossly undervaluing Oil Search. Resource PNG spoke with Oil Search Managing Director Peter Botten to explain more about the company's decision to reject this offer. According to Oil Search Managing Director Peter Botten, since receiving the proposal, Oil Search had undertaken substantial shareholder engagement with overwhelming feedback that Woodside's proposal had little merit. He said the board of Oil Search believed the company was currently in a very strong position, both operationally and financially, with a low-cost, high-quality production base, generating strong cash flows and excellent growth opportunities, with the proposed PNG LNG Train 3 and Papua LNG among the most competitive new developments in the world, adding that their focus is on continuing to build and create shareholder value through the company's strong future growth prospects.
Well, about 2 weeks ago, Oil Search received a highly conditional proposal from Woodside to potentially merge Woodside Petroleum with Oil Search. And that would be done through a scheme of arrangement, which is where shareholders swap 4 Oil Search shares for 1 Woodside share. And that effectively would mean that Oil Search would own, or Oil Search shareholders would own a percentage, around 32% of Woodside Petroleum. And that would be done on a share price of approximately $7.60. The share price ranges a little bit, but $7.60 per Oil Search share was, broadly speaking, what on the day Woodside would pay for Oil Search shares. And obviously since that time, since receiving the proposal, we as management and the board of Oil Search have done a very substantive analysis of the proposal. We received a data pack and a presentation pack from Woodside at the time, and it allowed us to do a full review of the value of that potential offer from Woodside to Oil Search. And we also went out and comprehensively spoke to our shareholders. And when the terms and conditions of the Woodside offer and proposal were put on the table, it allowed us to go speak to our shareholders and assess how attractive or otherwise they thought the Woodside proposal to be. And with that engagement with shareholders, we got a very clear view about what they thought about the value that Woodside were offering. And we also could engage with our own board to discuss the size and shape of what they had offered. Having had a board meeting on Sunday night, Oil Search board unanimously rejected the proposal as being opportunistic and also far, far below the value of what we think Oil Search shares are actually worth. So on that basis, we told the market and we told our investors yesterday that we did not support the proposal, and we told Woodside that as well. Well, the shareholders are in many cases long-term owners of Oil Search, and they've viewed that we have some real quality assets in PNG, that we have 1 and potentially 2 world-class LNG projects in this country. We have a quality exploration set of assets here. We also have a very strong balance sheet. This business is going really, really well. And in what our shareholders said, that they value the Oil Search shares far higher than Woodside had offered. And that was really backed up by the range of analysts and investment banks that look at Oil Search, who also said that they valued Oil Search shares far above the number presented by Woodside Petroleum. So it was actually a reasonably easy decision to make to reject the Woodside proposal. But it was backed on proper analysis, proper governance, and it was backed by very strong support from our shareholders. Look, I think the government, in common with all our shareholders, thought the offer was too low. And in reality, again, I think certainly in the statements and discussions we've had with all our shareholders, including the government, they would be very dependent on what the Woodside board, what the Oil Search board will say about these things, and dependent on what advice that our board would give them. I think there's a special relationship between Oil Search and Papua New Guinea. Over the last 10 years, Oil Search has spent over $11 billion in this country. We've taken revenues made out of our oil business and ploughed it back in with borrowings to continue to build our oil business and our exploration business here, and also participate in PNG LNG and hopefully in Papua LNG in the future. Papua LNG and PNG LNG are world-class projects, and our relationship and our focus on PNG to build our business here has given us very superior share value performance in terms of returns. And it also provides us now with a huge platform to further grow our business. So Oil Search is focused just on PNG. So our future is in PNG, and our future development is very much linked to the fortunes of the country. People and companies that are outside PNG have different interests. And those interests may not be aligned with those of PNG. So if you're involved in different LNG projects around the world, they are going to compete with what we are doing in PNG, and it's natural for them to do it. I'm pleased to say, though, that the PNG projects are world-class, so usually we come out on top. But at the end of the day, Oil Search is committed to this country. It has a large number of PNG shareholders, it has the government ownership, and we think our focus on PNG makes us very special and something that's reasonably unique.
However, any possibilities of similar bids from rival companies have not been ruled out, with Mr. Botten further saying if any proposals are tabled in the near future that reflects compelling value for Oil Search shareholders, there may be discussions.
Look, we work for our shareholders. Whatever we do, we work for them. And there's no doubt that if there's a compelling bid that represents value for Oil Search, the board of Oil Search will have to look at it, and we'll look at it and engage again with shareholders to get their views. But everything is for sale at the right price, I think. And in reality, we have to look at all proposals presented in a proper way, in a professional way. And if those proposals are compelling and represent good value for shareholders, then we certainly would be recommending that transaction move ahead. But the Woodside one was not in that league, and it was relatively, after doing the work, relatively easy to say no. You know, the company itself has never been in better shape. We'd all love the oil price and the gas price to be higher because our revenues would be better. But at the end of the day, we're still highly profitable at oil prices well below the $50 or so a barrel oil price that we're experiencing today. We are involved in world-class projects which do deliver superior returns across the world. There are many projects that are sub-economic or marginally economic, but because we have such quality in Papua New Guinea, it makes us attractive for other companies to have a look at us. And obviously Woodside saw us being attractive. They just didn't want to pay the price that we thought was worthwhile. We have a very profitable, very strong business. We have a liquidity of around $1.6 billion to be able to spend in this country, and we could expand that further if we so desire. But at the end of the day, we believe a very good company, strong company, especially able to grow in this world of a low oil price regime.
Woodside, on the other hand, has also updated its shareholders of the decline by Oil Search for its bid. It said it was surprised and disappointed that the board of Oil Search had rejected the proposal without meeting with Woodside to understand the benefits of the opportunity or to negotiate the terms of a possible merger. Despite this setback, Woodside said it would continue to maintain a disciplined approach in relation to furthering its business development opportunities.
Look, I think it's a tribute to Oil Search's quality of assets and its position in PNG that people are interested in buying us. The question, I suppose, is what are they willing to pay? Woodside thought that offer was fair. There's unanimous views from our shareholders to say it was substantially below the value that they would expect, and the analysts and the investment world right across the world has said this is not enough, and I think that's very positive, and they're valuing Oil Search far higher than we've seen through the Woodside offer. So the platform is great, and we've got a very good future, but it really is back to business.
You're watching Resource PNG. Coming up after the break, two prominent people within the energy sector recognized by their peers. Don't go away. watching Resource PNG. The role of a director is extremely important. His or her collective decision with their fellow directors lay out the path that any organization may take to ensure its success. Directors also have an obligation to ensure their decisions are in the interest of their shareholders, and as such, they must be held accountable for their actions, particularly if they sit on a board that deals with public funds. President of PNG Institute of Directors, Ian Tarutia, recently made these comments when addressing the Institute's annual awards night in Port Moresby. Among those that were recognized for their efforts were two people heavily involved in the energy sector in PNG. Isikeli Taureka, Senior Vice President PNG of Interoil, was announced as the PNG ID Fellowship Award recipient. In addition, Origin Energy PNG Country Manager Lesieli Taviri was named Female Director of the Year. Here is a look at the Papua New Guinea Institute of Directors Awards Night. According to PNG ID President Ian Tarutia, there is now a push for legislation to support the existence of PNG Institute of Directors, similar to that which governs the legal fraternity, accountants and engineers. This, he says, could be a way of promoting more accountability, particularly if a director sits on a board of an entity that deals with public funds.
The intent is to make the PNG the sole legitimate, recognized body in the country that certifies anyone who wishes to be recognized as a professional director. And for instance, a person who wants to take up the directorship of an organization that deals with public funds must be cleared and be a professional member of the Institute before they take up their appointment.
With constant changes in international standards for directors, there is now a need for directors to be aware of their responsibilities in being made accountable for their actions and in certain cases for failing to act where required. These are some ways in which the PNG Institute of Directors is looking to evolve to conform to international standards. They are part of the Institute's mandate of improving the professional and ethical standards of directors as well as potential directors. His comments were well received by those present, who also witnessed the announcement of this year's awards recipients.
Michael James Babbitt has been awarded the Male Director of the Year.
Michael Varapik won the Male Director of the Year award for his role on the boards of landowner companies, in addition to his support for the Catholic Church programs in PNG. Lesieli Taviri took out the Female Director of the Year award for her work within the energy sector, as well as for her work in championing the development of women in business. Christopher Elphick was named Young Director of the Year for his outstanding efforts in promoting PNG business, as well as his leadership of the Young Port Moresby Chamber of Commerce and Industry.
Lastly, I'd just like to thank my employer, KK Kingston, Keith and Michael Kingston. My bosses have always been very strong believers in developing young Papua New Guineans, promoting them in their business and letting them follow their development goals. And if it wasn't for them, I wouldn't be able to do that myself and be standing here in front of you today. So thank you very much, KK Kingston.
Pacific International Hospital received the Innovative Company of the Year award for its work in advancing the provision of medical services in PNG. And Interoil Senior Vice President, PNG, Isikeli Taureka, was announced as the PNG ID Fellowship Award recipient for his services to the petroleum industry, particularly for leading the way for Papua New Guineans to excel in top management roles on major international energy corporations. With the caliber of this year's awards recipients, there is hope that the Institute can grow to meet expectations in terms of accountability and integrity, not only in PNG, but also on the global scale. And that brings us to the end of this episode of Resource PNG. To contribute to this program, get in touch with us via email on resourcepng@mtv.com.pg. To view this edition again, log on to www.mtv.com.pg, where you will find a link to the Resource PNG page. You can also follow us on Facebook. Just search for Resource PNG. Until the next time, pleasant viewing.